Moving on, emerging markets venture capital firm Quona Capital today announced the final close of its Fund 3 at $332 million, significantly exceeding its $250 million target. Now, this is the third fund from Quona Capital since its inception, bringing the firm's aggregate committed capital to over $745 million. And to talk to us about Quona's road ahead, joining me now is its co-founder and managing partner, Ganesh Rengaswamy. Ganesh, welcome to Startup Street. This is the third fund from Quona Capital. How do you plan to accelerate financial inclusion investments with the $332 million raised? If you could elaborate on how many investments you plan to make, the ticket size, and how soon?
Sure. Thank you. Thank you very much for having me on the show, Shruti. It's delighted to be here. And we are super excited to have raised this fund, especially in these challenging times. From a Quona perspective, our strategy is going to continue to probably be more or less similar to what we had in the previous funds. We will probably roughly invest in about 25 plus portfolio companies. We invest across 4 continents, and India is one of our most active geographies, if not the most. And as you know, we are emerging markets. We are specialized emerging markets fund. And one of the evolutions from a strategy perspective is going to be fintech. And fintech adjacencies investment. And when I say adjacencies, essentially, we're looking at a lot of crossover and hybrid opportunities, which contextually fall at the convergence of financial innovation and sectoral innovation, whether in ag tech, food tech, health tech, mobility, supply chain, SME digitization, climate tech, so on and so forth. The foundation of Quona is that we look at fintech as our financial innovation as the oil that greases the economic engine across sectors. And hence, it gives us the platform and opportunity to invest quite broadly to make an impact from financial inclusion perspective.
So 25 plus companies, Ganesh, but what is the ticket size going to be and how soon do you plan to start investing?
We are already investing out of this fund, Shruti. This is the final close of the fund. We've been investing out of this fund for about a year. And the ticket size, is more diverse in case of this fund, or rather more divergent. We can invest as low as $500,000 to $1 million, and as high as about $10 million to start with. But average check sizes would be about 5 to 6 million. And over life of a company, we'd probably invest about 2 to 3 times of that in the portfolio companies.
All right, Ganesh, like you said, Quona focuses its investments on innovative technology companies that are expanding access to financial services for the underserved consumers and businesses. What is the kind of impact Quona has created through its portfolio companies? If you could give us a sense of what kind of role Quona wants to play in the impact investing industry.
Sure, I'm happy to do that. We do come up with a very detailed and extensive impact report on an annual basis, and on quarterly basis, we work closely with our portfolio companies to actualize and measure these the frameworks through which we understand impact. And we are proud to say that Quona probably has, from a capital raise perspective, we have helped our portfolio companies raise about 10 times the amount of capital that we have invested in these companies in equity form over the years since we have been active. From a consumer and SME impact perspective, Quona has probably reached or been able to reach through our portfolio companies and the work they do over 50 million SMEs and consumers. And from a throughput and value perspective, probably a transaction of over $100 billion, whether in terms of across various verticals, whether it's payments, whether it's credit, both consumer and SME, whether it's in insurance, whether it's in cross-border trade, so on and so forth. So it's still early days, and we have a long way to go, but we are very proud of the impact that we have been fortunate to create through the work our portfolio companies do.
Okay. Quona Capital funds have made more than 65 investments since the firm's inception. If you could take me through Quona's investment thesis, what do you look for in companies and the founders? In fact, a large part of your emphasis is on companies that further invest in underserved markets, like we discussed. Any area in particular that interests you, for instance, credit or MSMEs or companies supporting women entrepreneurs, or in general supporting women?
Yes, absolutely. I think the answer is all of the above, because we're very focused on the sector. We happen to be a fund which is very focused on inclusion and diversity. We do look at broad spectrum of founders, including women founders. More specifically, I think from a sectoral perspective, if we look forward in terms of what are the exciting areas for us in financial innovation, I think we believe that financial infrastructure and the role of fintech in helping develop the financial infrastructure over the next few years is going to be pretty significant. And in several of the verticals in banking, in credit, in wealth, in insurance, etc. I think we have been running on infrastructure which is probably a couple of decades old in several cases, and the way consumers and SMEs experience these things have significantly changed over the years. So we are very bullish on evolution of financial infrastructure.
Okay.
We are very bullish on other theme, which is verticalized or embedded finance.
Okay.
And what we believe is financial services are going to move from largely being transactional to being more contextual and more experiential. Okay. And we think we'll see significant evolution on that front.
All right. Thank you for taking us through the new trends. But Ganesh, I can't leave without getting your opinion on the global tech route and how it could impact the health of the India tech ecosystem. Your comments on this?
Yes, I think it's very topical. You're absolutely right. Something we cannot miss. There are always positives positives and challenges in every crisis, and this is the fourth crisis I'm experiencing. The good part is I think we have a lot more stability that's coming into the ecosystem and coming in rapidly, and it's very much needed compared to the frenzy we saw in the last few years. The challenging part is even good companies clearly are having to reflect and work hard to stay afloat, to ensure that in 2023 they consolidate their position to make 2024 a growth year. So definitely there are some clouds in the horizon. But for companies which are building for the long term, and for folks like us who really back companies for the longer term, I think this is the time to really consolidate and build.
Okay. All right, Ganesh, we've completely run out of time, but many thanks for joining us on Startup Street, and wish you the very best with all your growth plans.
Thank you very much, Shruti. Really appreciate you having me on the show.
Welcome back. You're still with us on Startup Street. Now, Bengaluru-based space tech startup Bellatrix Aerospace recently announced that it would invest $76 million to establish an R&D center and manufacturing facility locally. Now, this new facility is expected to manufacture thrusters, including the Hall thruster, microwave plasma thruster, nano thrusters, and green propulsion systems. Now, founded in 2015, the startup specializes in space propulsion systems and rocket propulsion technology, making space technologies affordable and accessible for all. Joining us now to discuss this further is Yashas Karanam, the co-founder and director of the company. Yashas, thank you so much for joining us on the show today. Like I said, you're setting up an R&D facility for your space taxis and propulsion systems for rockets and satellites. Take me through how big this new facility will be, and by when will it be functional?
Thank you for having me here. I think the new facility is going to be spanned across 5 acres of plot, which is about 230,000 square feet.
Right.
And I think a majority of this is going into state-of-the-art R&D centers. The goal for us is to kind of build a world-class facility right here in Bangalore. And we are almost there, because I think all the experiments required to kind of set up something like this have already been done. And we have been incubated at Indian Institute of Science. And we have already worked with a lot of these kinds of equipments here. And we have set up our own lab here, which is already worth several $1 million. So I think with that experience, we are now planning to gear it up. One is towards R&D, but also more importantly, we are hitting commercialization next year. And once we go commercial, we require one of the best facilities across the space tech area to kind of service the rest of the globe, right? There is a lot of market coming in from across the world. So that is something that we are looking at with this facility.
All right. So once operational, now you expect the facility, I mean, you're putting in $76 million, so that's how much you expect the facility to be worth. So what will we see come out of this facility, and how soon is this expected to turn revenue accretive for you guys?
Yeah, the revenue is going to start in just next year. I think the cycle is going to start, but I think for us to make that return on investment on that $76 million, it's going to take some time, but I think we are going to get there quickly. That is the goal. And coming out of the factory will be propulsion systems. As you mentioned, there are 4 different classes of propulsion systems that we work on. One of the unique things of Bellatrix is that we have capability to service any and every kind of satellite mission requirements, be it a small nano satellite, which is literally this small, the size of maybe your wallet. So if you have a satellite which is that small, a pico satellite, we would have a solution for that. Then going upwards, if you're looking at satellites which weigh probably several tons and probably the size of a room, we would still have an engine that would fit that. So we would be manufacturing all of these to the precision requirements of the space industry. And also for these kinds of facilities, one of the very important thing that space for something like us actually demands is that your product should work in space for at least 20 years of time. So it's very different from manufacturing something here because you have the option to go and service it. But in space, you don't have that option because once you're gone there, there is no serviceman who can do it. So you will have to build your systems to be highly robust. You will have to simulate the entire harsh space environments here on Earth. For example, you will have to create the same vacuum conditions that you are going to find in space. And you will have to create the same thermal conditions. A lot of time when your satellite is facing the sun, you're exposed to plus 120 degrees. And when you're on the other side, you'll be facing about minus 100 degrees. Right? So you will have to simulate all those things here in your facility and qualify your systems accordingly.
Right. So you've told me.
And it's not just the satellite propulsion systems. We are also going to be working on almost all kinds of propulsion tech for ground to space and in space and deep space missions.
Right, absolutely.
But more importantly, we'll also be working on something called a orbital transfer vehicle. For a common man, it can be compared to a Uber pool in space, basically like a taxi which can take your satellites from one orbit to another orbit. And we are going to be setting up that here, setting up a facility here to actually manufacture and bulk produce some of these.
Right, Yashas. But if you could quickly tell us what's the capacity at this facility going to be like? You've already told us what you're going to be manufacturing there. So what's the capacity going to be like, and how soon will we see you start manufacturing, especially in your phase 1?
I think we are going to start with over 1,000 thrusters a year and then kind of accelerate and take it upwards based on the growth and how the revenue kicks in. But I think we'll be able to easily take up more than 1,000 thrusters a year, which is actually quite a big number for the kind of industry we come in, because for propulsion systems, usually the lead time in the market is pretty large. So the goal of this facility is also to kind of cut that down and make it to few months, I would say.
All right. So also, your space vehicle is expected to launch to the lower orbit of the Earth in 2023. So as you explained, it's a taxi in space, will offer ride sharing for small satellites and drop each one of the passengers to their intended slots in space. So can you take us through where you are on this front? What's the update on this?
For our thrusters or propulsion systems for satellites, these are basically engines for satellites that help satellites move from one orbit in space to another orbit. Basically, for a satellite to go from one orbit to another, you need to build an engine which works in vacuum, which is very different from all the engines we have built here on Earth, because you have a medium or you have some sort of mechanism against which you kind of use the atmosphere or use friction and propel your things. For space, it is very different because you need to make something that works in vacuum. So these kinds of engines, we have a lot of expertise in making them hardened for all the space environments. So coming back to the question here, so we would be having these kinds of systems actually tested in space in an actual satellite next year. 2023, there will be multiple satellite launches where our thrusters are getting qualified. And for the space taxi, we would actually launch that in the year 2024. That's when it's getting space qualified.
So we'll see the space taxis in 2024. All right, Yashas, we're completely out of time, but thank you so much for joining us on the show today.
Thank you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.